It's time right now for Charting Futures. There's Abigail Doolittle. And Abigail, I understand you're thinking about Brexit.
You're right about that, Romaine, even at this time of the day. I am thinking about Brexit because earlier today, France did say that it sees a no-deal Brexit as the most likely outcome. However, that didn't weigh on stocks either in Europe or the U.S. Take a look right now at the Dow and the S&P 500, both higher. As you can see, the FTSE 100 in London finished up 1.1%, and the CAC 40 in Paris up 1.7%. So clearly, that potential risk of a no-deal Brexit not weighing on stocks on the day. True risk-on mood. However, if we take a look at this interesting chart within the Bloomberg, a risk index going back to 2015, this basically tells us when risk sentiment is very high or low. So we go see back in the summer of 2015 ahead of the big correction that we had later that year into 2016. Risk on had been very high and then low, and then certainly out of the 2016 lows climbing for the most part higher. We did, of course, on the volatility last year have it dip down. But what I'd like to point out is we are super low in terms of risk appetite on the part of investors, all of the uncertainty around the economy, trade, the Fed, central bank accommodations. So to talk more about this, I'd like to bring in Tom Thornton of Hedge Fund Telemetry. Thank you so much for joining us. And, you know, you've had a great call because you actually, when stocks were at all-time highs back in July, you were talking about this kind of stock market volatility. But today, sticking with the Brexit, you want to talk about the pound. You have a somewhat of a contrarian view here, I would say.
Yeah, I think the sentiment on the pound is just super bearish right now. And we're seeing the commitment of traders report. The large speculators are super bearish right now.
So first, let's start out with your futures chart, because there are pound futures that folks can trade, and you, of course, are recommending to buy them.
Right. Well, so first off, just a very simple technical chart. You're starting to see the MACD on the bottom here, which is almost a reflection of sentiment turn up a little bit here. It's trying to bottom here, and I think the bad news is in this currency right now, and I think you could see a lift.
Okay, and so what level are you looking for in terms of buying?
Well, I think we can get to 125 from this level here. That's a pretty easy level to get to. 127 is my reach for this trade. And look, the last time we had the commitment of traders down at these super bearish levels, we saw it move from this level to 140.
So let's bring that picture into our segment here. And this, of course, is not, these are no longer the futures, this is spot.
Right. So I'm using spot because, just to illustrate, because we're using the August contract. But the commitment of traders report was very, very low in 2016. It's at the same level.
Which means it's super short.
Yeah, people are really, really short. So there's fuel if this thing starts to move.
Okay, so now, we were just talking about buying the pound futures. Let's talk about why you would trade futures over spot or, other vehicles.
Well, I like it. I mean, there's a couple things. There's transparency in pricing. So you see that, first of all. It's very easy. The order flow is very clear. Execution is much easier. There is instead of a 2-day settlement, you have a longer settlement. And I think it's a level playing field. Also, you can see how many people are short by the commitment of traders report. And I like that a lot. I think that's helpful.